What's up, traders? It's your boy Vincent, aka Vin Boss, and I'm here to deal with you with the daily market analysis. Now, before we get to anything else, please make sure you like, you subscribe to this channel, and you make sure that you don't miss any of these videos. So, without wasting much of our time, let's get straight into what the market has in store for us. Now, this is the DXY, the dollar strength, and with that being said, we are near our monthly break of structure, which in details might indicate the fact that we are now going to retest from this level to continue to the downside. As this is most evident, we are now going to the upside, and more or less this is exactly what is going to happen in the market. So with that being said, traders, I do expect to see this going to the downside, or rather, if that doesn't happen, in the case that it does go down below, I'm still expecting to see a pullback, reach this level, and then a continuation to the downside will be imminent. Now that there's only one from here to here, we would say this is 1% or even 1.5 or close to 2%, that the market will reverse to the upside. So we do not take those kind of percentages. Everything else has shifted to the downside, and we are now going to follow this to the downside, as we already tell all the traders about the real account traders community signals and market updates. So with that being said, traders, remember to register your account under the exclusive XNS link. The link will be dropped below this video description, and verify your account details. Fund the minimum of $100 and more. Send proof of registration to me on Telegram. The link to the Telegram will be left down in the video description. So without wasting much of our time, this is the DXY. We are now structured to the downside, waiting for a pullback to confirm our entry, because we can't just enter because we are going to the downside. Now, what I'm expecting, again, once more, a retest to this level, continuation to the downside, or much rather, if we go to the downside, we are still going to retest and continue to the downside. This is exactly what I expect from the DXY, and this is why we are now bearish on the DXY. Remember, the war is over now, potentially so. So with that being said, the war ending, meaning that this long streak that we've been making money on with the dollar strength comes to an end, because the safe haven, it only made money because of the safe haven assets. So with that being said, going to the downside mostly is the next theme for now, for the next 14 days, and potentially for the next 2 or 3 months. It will depend on the market behavior. So with that being said, let's go and analyze other currency pairs and see what they have in store for us. So traders, with the euro and the dollar, we have completed what we call the monthly break of structure right here. This red line, we always indicate it as the monthly break of structure. So we have broken above the previous month's high, which was March. So anything else that comes down, we'll see it as an opportunity to look for buying opportunities, and then continue to the upside, as this will automatically make us buyers against the dollar this time, rather than selling it. So this means, again, all the money that we made in the sales has came to an end. We probably saw that when we didn't make 1:20, it was 1:9, that there was a chance that this might happen. So this went straight through the 14-day liquidity, the wave liquidity, and the monthly liquidity, to retest again what we call the change of structure in the monthly time frame. And right now, what we need is a pullback and a continuation to the upside, to show that this monthly break of structure was indeed a strong one to reverse the market against the dollar. So with that being said, beautiful traders, this is euro and the dollar. So I would like for us to go to the pound and the dollar to see what it has in store for us. So traders, with the pound and the dollar, very simply put, what we are going through right now is a pullback after the monthly change of structure that happened here. A pullback again to retest the moving average, and a continuation to the upside. What we are going to experience is the retest of this previous broken structure, a continuation to the upside, to make sure that we do hit that 1:2 20 risk to reward ratio. This is the high of March, and the high of March was invalidated right now. And if since it is invalidated, this simply means the whole change of structure going into the next few months, maybe 2 months or so. So with that being said, traders, this is exactly what to expect on this. I am talking about something that is similar to this. In January 2026, when we started, the market was bullish, came down, change of structure, and the whole month we started selling this to the downside. And now we do have a new higher again. Continuation is to the upside. So the change of structure, very simply put, works the same on all currency pairs, especially if it is the monthly break of structure. So with that being said, beautiful traders, this is the pound and the dollar, and we will be sure to see other pound and dollar currency pairs later on. So with the US dollar and the Japanese yen traders, we did make less here. Of course, let's firstly understand we did make 1:6 here, which is not what we initially target, which is 1:20. We did have 1:3.1. We did expect this to be 1:4, but it was a miscalculation. This is one. This became 1:1 because 1:3.1, because this was a good buy, and then sellers came in and they give us a break even here. But if you didn't get out and you were on break even, you were going to be still in profit. The reason why we are not still into this, it is because of the weakness in the dollar. So we didn't want to trade both currency pairs if they are weak, especially the Japanese yen. It is falling against the majority of the pairs. We do have fantastic buys. We do have fantastic sells in the Japanese yen pairs with the Canadian dollar, with the NZD, USD, with the Aussie and the dollar. So with that being said, this is the US dollar Japanese yen buy signal to the upside. For now, we will not be interested in dealing with this, but if you're still in, this is a fantastic setup for you. Remember, these signals are only gotten here in YouTube, and all you have to do to join the real account traders community right now is register your trading account with the exclusive XNS link, verify your trading account, fund the minimum of $100 or more, and then send proof of registration to me on Telegram, which my Telegram name is Vinboss Signal Factory. So with that being said, beautiful traders, this is the US dollar and the Japanese yen for us. Let's go to the last but not least, the US dollar and the Canadian dollar. Traders, as we have shown on the previous YouTube video right here on YouTube, what we have seen is that this will keep on going to the downside because the Canadian dollar is strong and the US dollar is weak. So with that being said, this is going to be a strong and a sharp move to the downside. I think we are going to invalidate the monthly break of structure for March, even though it was a strong move to the upside. I think this is just going to keep on making this to the downside to break this. So with that being said, on the US dollar and the Canadian dollar, not very much interested because we didn't enter because of this and this. So we are waiting for a full invalidation. Remember the beautiful buy that we got from here? This paid out 1:30 something in pips. So go back to the videos. If you don't believe it, go back to the videos, go watch how we did make this before the signal arrived, during the execution, and after the signal has been executed. So go back to the videos, go and check what I am talking about. So from me today, I'm your trader Vinboss. With that being said, thanks for watching this video. Make sure you like, you subscribe, and you join the Telegram channel. The links to the Telegram channel and the registration will be left under the video description. For me, good night. Bye bye.